Good afternoon, ladies and gentlemen, and welcome to the MIRADA PLC interim results investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your question in the box below and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so, and these will be made available to you along with a copy of the slides via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll. Be grateful if you could respond to that. And I'd now like to hand over to the management team from MIRADA PLC. Good afternoon to you.
Good afternoon, Mark. It's a real pleasure to talk to you again. Thank you very much to all the attendees. A pleasure too to talk to you. I encourage actually sending as many questions as you can. On the Q&A section, we will be able to answer as many as we can and at the end of the meeting. Let me introduce myself for those of you that have not been in previous presentations. I'm Jose. I am the founder and CEO of the company. I've been working for this company for a long time. This was initially a professional services company that became a product company in approximately 2013, gaining more and more customers. I would like to introduce you to Gonzalo Babillo, that is our CFO. He has been with us for 5 years now. He was a mate in the MBA for me a long time ago, a life ago now, and he has been the CFO for companies like Electronic Arts and Disney for Iberia in the past before joining MIRADA. So just a few words about what we do. We are a software company, a product company working for the media space, working for pay TV operators, people like Sky, people like Virgin Media, people like Telefonica or others internationally. We work in a worldwide basis. We are about 180 employees. Most of the technical team is spread between Exeter in the UK and Madrid, although we have support experts in other parts of the world, like Latin America. And we are one of the top 5 companies in our space. Even if we are a small company, this is a very niche space, a very important one for the pay TV business, and we have a lot of experience. As I said, we have been working for this kind of customers for 20 years, starting originally in the old set-top boxes model. Now, the product range we have covers all the devices you can use to consume video content, including your smartphones, including a PC, a gaming console, and obviously smart TVs or set-top boxes. And we are, as I said, one of the leading companies in that field. Over this time, we have been working with many customers. You can see a list of some of the references you may know, some of them in the UK, like Sky or the BBC or Movistar O2 or BT, other customers worldwide. And the most important 5 customers in this moment are the top ones in this slide, starting with EC, that is a main player in Mexico, ATN in the United States and the Caribbean, SkyTel in Mongolia, Digital in Bolivia, or SAPI in Spain. We will talk about these customers a bit later and how we are progressing with them and with other customers later on. The most important messages I would like to give you today are that we have been continuing working in the space of media for the last 6 months. We have seen a lot of pessimism in the market in general, but media has been one of the good survivors and one of the good businesses to be in. There is obviously an uncertainty due to COVID-19, and our customers included have been quite cautious when deciding on the investments. They experience a very important increase, a substantial increase in the consumption of media and broadband during these months. At the beginning of lockdowns, they decided to slow down or pause investments. This is reverting. This is coming to a positive position now, but obviously, us as a company have been dealing with this decrease or dispose on some of the investments. So where we had a very, very important projected growth over this year due to the momentum that we have in the market. Obviously, these interims are not as important, as good as we would have desired 6 months ago, although we are quite proud of them. And actually, I would say that these are very good numbers. We have seen a kind of thawing of the frozen RFPs, especially in areas like Asia and the Middle East. And we are expecting Europe and the Americas, North America, Latin America, South America, to follow during the first months of 2021. What we are seeing is that decisions that were delayed or postponed in March, April, May, June are now restored, are now restarting, and some of the processes, the commercial deals in which we were participating, are now resuming all these discussions. This is a very, very positive note. We had the time and we had the commitment to reorganize the way we sell. Obviously, the kind of product that we offer to customers, the user experience, the way to consume content is really related, it's really linked to your capability of using the product, of using the devices. So what we have done during these months have been to migrate all the demo kits to the cloud. So now we can effectively do exactly the same demonstrations that we were doing before online if we cannot travel. I would say that this is what our customers were expecting, because in most cases, if not all the cases, they were restricting visits. So it's not our case, it's the case of any of our competitors. So competitors that didn't have the capability that we have didn't have the possibility to participate on the deals, and now we are participating on those deals. And another thing that we have been doing during these months have been to reinforce our local presence in those markets. We had local presence in some of them, but now we have a local presence in places like Malaysia, Indonesia, the Philippines we already had, Vietnam, Myanmar. So the possibility to talk directly to customers, even if you cannot travel, is there. We are meeting customers even with lockdowns, because in those countries in which you cannot enter, we have people in place in the field. Okay, so this has increased a lot the reach we perceive we have with customers, and hopefully it will result in an increased pipeline. And in terms of the financials, we also strengthen a lot our balance sheet, our financial position, and I will let Gonzalo explain about that.
Good morning, everybody. Well, let's kick off with a look at our revenues in the first 6 months of the financial year. Here you may see the evolution from 5.6 in 19 to 5.9 in prior year and 5.5 in this year. If we exclude Mirada Connect, that is the parking services business that we sold in July 2019, the decrease is only 0.2, it's only 4.5%. And if we take a look by customer, we have to point out that in prior year we had a very significant project with Easy Telecom. This project was the integration and development of our Android TV solution. This has been successfully launched in August 20, but it had significant development revenues in prior year. To be exact, it had more than $1 million in revenues in the first half of fiscal year 20. We have been able to develop other projects that Easy Telecom has asked to us, but not as big as the complete development of an Android TV platform. We have partially offset this decrease with more revenues from SAPI. SAPI is the customer we signed in Spain in September 19. As you may know, we announced the deployment and the commercial launch of this customer at the end of September 20, and we have had significant revenues in the first half of the year. And I think that's it. If we move to the next slide, we can have a view of our revenues by activity. We have 4 main activities: managed services, licenses, professional services, and the old business with Mirada Connect. In the first 2 ones, you may see we have had growth versus prior year. We have had growth in managed services. This is mainly due to additional support and maintenance services we give to EC Telecom after the deployment of the Android TV solution we mentioned. And despite the COVID-19 and the uncertainties in the globe, in the last months, we have managed to have growth in licenses. And this is remarkable because, as you may know, licenses and managed services are the lines of business where the margins are higher. We have had a decrease in professional services, 0.7, as you may see, but here the margins are lower because they are more labor intensive. As we explained before, the decrease in professional services is due to this one-off related to the Android TV project. Let me share with you that the main part of the growth in the licenses come from licenses from SAPI after the commercial launch in September. Okay, and after talking about our revenue, let's share with you a dash about our EBITDA. You may see the positive trend from almost break-even in 19 to 0.2 in prior year. Well, to be more exact, in prior year we had a profit of an EBITDA profit of $1.9 million, but 1.7 came from the one-off gain of the disposal of Mirada Connect. So in order to compare apples with apples, we could compare the minus 0.1 in 19 with 0.2 in prior year and 0.6 in the last 6 months. This 0.4 growth have 2 components. On one side, as we have explained before, revenues slightly decreased, 0.2, but we have had cost savings in approximately $0.6 million. These cost savings have two main drivers. On one side, we have operating costs control, and on the other side, as you may imagine, we have had there was an absence of international travels and events that obviously have translated in fewer costs. Okay, and after EBITDA, let's talk about our cash position and net debt. We have tried to strengthen our credit facilities in order to have margin of maneuver in the middle of this uncertainty, especially nowadays or currently. We know about the vaccines. It seems the vaccines are going to be available in the coming weeks. But we weren't sure about this in the last months, so we have tried to increase our credit facilities in order to have margin of maneuver to face any potential uncertainty. In this line, we applied and signed $1.8 million in new COVID-19 loans. These loans have very good conditions. They are signed for 6 years. There is no repayment in the first year. The news we received last week is that there is not going to be repayments even in the second year. So they will repay it in year 3 to 6. Interest rate is quite reasonable, is between 2 and 3%, depending on the bank. And there is no collateral from Mirada. although the Spanish government guaranteed 80% of these loans. And we have not only moved forward with the loans, we also renewed all our credit lines. Total value is a similar amount, approximately $1.7 million. And instead of renewing every year as we did in the past, this time we have renewed them for the next 3 years. So this is translated in our balance sheet, moving from the short term to long term. Also, we had a very good conversation with our main shareholder, always supporting us and helping us. And this time he agreed to extend the 1.3 million euros loan with him. And we agreed to extend the loan until November 2021. So again, this facility appears in the long term. This is what we have done. We can share with you also what we are planning to do. We have applied for 2 new loans to CDTI, that is a Spanish government entity that promotes R&D and innovation. We have applied and obtained some loans from them in the past. They have very good terms. Usually they are repaid in 10 years, 0 or 0.10% interest rate, no collateral. So really interesting. And we have applied for 2 new projects in the first half of the year. And we will know the outcome of this in the second half of the year. And additionally, each time we sign a new contract with a new customer, we open factoring lines with the banks for the billing to these customers. So after all these actions, our net debt has significantly changed. We would like to highlight here on one side, you may see that the short term has decreased almost to half, from $2.7 million to 1.3. And additionally, you may see that the composition, the split between short term and long term has dramatically changed from approximately 50% short-term loans 6 months ago. After all the actions we've taken, currently our short-term debt represents approximately less than 20% of the total. So definitely a much healthier picture. And I think we are moving to the operational highlights.
Okay, thank you very much, Gonzalo. I would like to give you 5 big points in terms of the competitive position, sharing with you where we are in terms of a strategy. Hopefully it will not be boring, but will give you a good sense of what it's our competitive advantage and how this company provides value to our customers. Okay, so the first one, you will have seen the news that we submitted to the market in September, is the Android TV operator tier launch. So trying to put this in simple terms, you will all have seen how Google decided to enter the mobile phone market. They don't charge any fee to subscribers or users of mobile phones about Android TV that now represents more than 8% of the devices in the world. The way they make money with this is through advertising. So they don't make money with the devices themselves. And they have decided, because the media market is more and more important, the audiovisual market and the video market is extremely relevant, they decided a couple of years ago, more or less, to enter the TV field. That means that instead of using Linux boxes, now TV players can use Android-based boxes that give them access to third-party applications and other benefits like a reduced cost on the boxes. So we have been one of the first companies to be able to partner with Google and our customers to do a significant deployment of the Android TV technology. It was a risk for customers being first movers, and Easy and Zappi both have decided to go to Android TV. Significantly, Easy will be one of the largest references for Android TV deployments in the world. Since the moment that Easy decided to go and use this technology to now, the market have suddenly changed, adopting this trend, and all customers are now asking for Android TV-based deployments, with makes us being in a very, very good competitive position, because we have one of the largest, if not the largest, reference of Android TV deployments in the world. Obviously, our relationship with Google is extremely good on this extent, and we have some questions in the Q&A about Google. We will reply to those a bit later. Doing this, there is a technological advance and puts our product in the forefront of the capabilities that you can expect on this kind of platform. We also have been working a lot in the aggregation of content from third parties. You may see players like Netflix or Disney or HBO being competitors to our customers, while the reality is that most of their growth is actually driven by agreements with customers like Comcast or Telefonica or Vodafone, Liberty Media, or Easy in Mexico. Easy, being our largest customer, have integrated so far successfully HBO, Fox, Netflix, that was announced last year, and we are very proud to have been able to integrate also Disney Plus in their proposition. They are the only Mexican pay TV platform with an agreement with Disney. It's an exclusive agreement to provide an aggregated service. That means, and I'm moving to the next point, that you don't need to go to specific and individual tools to do your search for the content. If you are willing to watch, say, Back to the Future, nowadays, if you have a fragmented service and you have 3 or 4 or 5 OTT services, then you will need to go to each application to look if they have the content that you are looking for, or to go to an external tool and search where this content is available. In our case, you have one single platform, one single search and recommendation tool, a highlights section. You go there and it's all there. You don't need to worry about that. Obviously, there is also the benefit of a bundle in which you will have a reduction on the price of your Disney subscription or Netflix subscription because you have the agreement with this customer. This is where pay TV is moving. This is called the super aggregator strategy. Started in the United States, and now everyone in the world has been following this. So being integrated with more than 30 different content providers so far, including the big names, makes us in an extremely strong position. If you are a new pay TV platform and you are willing to deploy a service, one of the things that you will be looking for is someone with the technology already integrated with the content providers. And we are one of the few companies in the world having this element in the proposition. Added to the Android TV capability, Android TV Operator Tier makes our proposition extremely competitive, extremely attractive. During the lockdown, we have been able to do 2 full commercial rollouts in customers, one in Bermuda and another one in Spain outside of our area. We are working from home, and we have been working from home since March. Everything is working perfectly, and we are quite happy that we have been able to deploy these customers during this time without any glitches, any technical glitches. So our customers are happy with us for that. As I said before, one of the 5 points that I would like to highlight is that we have also strengthened a lot our strategy, our commercial strategy, with more local presence and with stronger agreements with partners and resellers to be able to address the growth of this market. So if we look at where we are in terms of super aggregation, you will see some of the names here, HBO, Fox, Blim for local players like Mexico, Netflix, Starzplay, Disney. I can tell you that we are working now in the integration of another big name, and hopefully we will be able to announce this integration shortly. And in terms of devices, we need to be able to provide you the service, to provide you the content whenever, wherever you want it. This has been in the core of our strategy for a long time now, and we have one of the most extensive list of supported devices, as you will see in the right of your screen, starting with traditional Android, iOS, mobile phones, tablets, to web, to smart TVs of different brands, including also other devices like Chromecast or Roku and gaming consoles. So we believe that we are not letting any major device out of the list, and you can actually deploy a platform like Sappi is doing now, and you can offer your customer not to have a set-top box if they don't want to, and to just use their TV, the smart TV they had, or Chromecast dongle, or using AirPlay if you are an Apple user, to be able to broadcast and to use your service in your main screen. So we are limiting or reducing dramatically the barriers of entry of pay TV players in the field due to this integration with many devices that we have done so far. Okay, and talking about customers specifically, Easy is our main client at the moment. We have been talking about the integrations we have done so far in terms of content. I would like to remark how strong is our position in Easy at the moment. So with the Linux technology that we sold them 3 years ago now, we have 2.9 million set-top boxes active in the market. That means that out of the 8 million set-top boxes they have with real customers, a bit less than half are actually now Mirada set-top boxes. But we are rebooting that, and this is extremely good, because now with Android TV, our expectation is that the customer, is that Easy will start replacing all the legacy boxes, including our previous Linux boxes, with these Android boxes. The model we have with Easy is that they pay us for every single new box they deploy in the market. If they change the technology, if they go to a new Android TV service, this gives us another 8 million boxes to be replaced over the next few years. So it's a one-off per box. The size of this market is extremely important, and we have an extremely good relationship with Easy. The fact that they selected our technology for the new next generation, the Android services, and that they are using our technology to integrate with the different content providers is very good proof that this customer is a very solid reference for us and a stable reference for us in the market. Apart from the set-top boxes, they are also providing service to customers through other devices like the web or tablets or smartphones, and we have another 1.2 million households using this technology at the moment. Sappi is the latest deployment we have done. This is in Spain. There are a few questions about Sappi that I will address in the Q&A. This is a different model. It's a very, very good one, in which you have many small players in the thousands, tens of thousands of subscribers that join forces, select a unique platform, they share the brand, and they are able to compete with the main tier 1 and tier 2 players. So the content agreements are aggregated. That is very good for them, and the technology they are using is a tier 1 technology, even if they are tier 3 players. The fee they pay per subscriber, per new subscriber, is higher than those that we receive in Mexico. The size of the customer, we have been quite conservative, assuming that they will only have about 150,000 subscribers over the next 2 years in our forecast. The customer is declaring that they are expecting to reach 600,000 subscribers over the next few months. And if this is true, obviously this will be a quite relevant upside to our projections. This is the biggest launch that we have done so far in Europe, and we expect others to follow. But Sappi started their live service, the commercial rollout, as I said, was done at the end of the reporting period, and it's going very well. It's going very well. One of the things that we are doing now, actually, we provided the service to all of our interested employees for free, just to give them the capability to give feedback to the product in a very good real time. So this is good for the customer and good for us. ATN International, for those of you that don't know this customer, this is a NASDAQ-listed company. They are based in Atlanta, in the United States. They have several properties in the Caribbean and in the mainland states. We have an agreement with them to roll out the service over 4 different countries in the Caribbean. We started with Bermuda. We recently commercially launched Villa, that is the second customer in the US Virgin Islands using our product. In Bermuda, actually, they reach nearly 90% of the households. That is a very good penetration. And we are now working on the deployment for the next 2 countries in the Caribbean and having discussions to integrate also in the properties in the mainland states. It's a very good customer. This is the first software as a service model that we signed. That means that they pay us a subscriber per month, a fee per subscriber per month. That is very good, I would say. And this includes everything, including the upgrades on the product, the support, the maintenance, and the managed services. So we expect to replicate this model in other customers, and we expect to grow the business with ATNI in the near future. And coming to the last 2 relevant customers using the Iris platform, among all the customers we have, Digital in Bolivia has been probably the most affected customer by COVID-19, especially with the transition they had of government in Bolivia over the period. Now it looks like the situation is much more stable, and they have resumed the integration of the video on demand, the latest video on demand bits, and integration with a content provider. And we have been told that they are resuming the promotion of the platform very shortly. And another customer we have, and was our first Asian customer, hopefully, fingers crossed, many others will join. This is Skytel in Mongolia. Skytel surpassed all their expectations in terms of the penetration of the service, and we are expecting them to resume and go for the next stage in terms of the OTT service and how they are deploying the service over the next few months at the beginning of the calendar year. So, in summary, I would like to highlight these 5 points. The first one is that we are now much stronger in terms of cash due to the new credit facilities, long-term facilities, and the composition of our balance sheet. We have seen a cautious approach in our customers in terms of investment due to the pandemic, but now it's steadily returning. Even if we suffered from a small reduction in our expectations of growth in terms of revenues, this didn't affect much us. And you have seen that our results in these 6 months have been pretty solid. We have been able to contain the cost at a higher level than the reduction on the revenues, and we have been able to grow in the bottom line. Said that, we are expecting that the increased investment appetite in our customers and the good health of the media market will allow us to follow this trend over the next few months. We have improved our sales strategy, adapting to the new times, even if the pandemic have been forcing most sales teams to be able to provide or to offer their services remotely. We understand that this is not going to be just confined or restricted to the pandemic period, that most customers will be interested in having a test, in having a first preview of your services remotely before asking you to travel, and we are adapted to these new times. Okay, the pandemic didn't affect us operationally. We have been able to demonstrate that actually doing 2 commercial deployments, and we believe that the super aggregator strategy, our positioning with Android TV, the integrations we have done with content providers, and the big reference that we have in many customers now, but starting in our highest reference and our biggest reference in Mexico, is puts us in a very strong position to compete and to gain opportunities in this market. So I would like to now address the Q&A. Please feel free to make us as many questions as you want.
Jose, perhaps I could just jump in just momentarily. Ladies and gentlemen, please, as Jose was about to say, continue to submit your questions using the Q&A tab on the right-hand corner of your screen. But I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. And I would really reinforce the importance of the company understanding the views and expectations of both existing and potential shareholders on their views about the company. Jose, Gonzalo, I know we haven't particularly given you a long time to look at the questions, but on the Q&A tab on the right-hand side, if I could ask you to start at the top, perhaps read out the question, who it's from, and where appropriate to give a response. That would be very kind of you. Thank you, Jose.
Thank you very much, Mark. Perhaps it's good if Gonzalo starts with the first one. Gonzalo, are you able to see the questions?
Yep.
So the question is now published. If you go to the publish, you will see that.
So if you click on the Q&A tab, and then on the left-hand side, it says new. If you just click on new, and then you'll see the first question at the top.
Yeah, so the first question is about the amortization of our R&D costs, and it's about if the level of the last 2 years will be consistent in the future. Well, we have done, as we have explained before, we have done a significant investment and effort to the deployment of the Android TV solution. This was in partnership with Google, and it really affected most of the areas of our solution. It was really a very, very significant project. This was translated in the R&D, and we don't have currently any other project that is going to consume the same amount of R&D resources in the near future. Having said that, Jose also explained that we are planning to integrate more premium providers. This is a very dynamic market. Technology keeps evolving quickly. So we may have a decrease in the R&D investment compared with the last 2 years, but it will not be a significant one, or it will not be a huge decrease, because the technology keeps evolving, and we have to be and we have to adapt and be the first in the markets with the new solutions.
Jose, sorry, just forgive me. I think you might be on mute. Thank you, sir.
I'm sorry. Thank you, Gonzalo. Now, talking about the next question from Nick about our Google relationship and where we see that progressing. Well, it's clear that for Google and for us, this has been a very, very important milestone, the integration of Android TV operator tier in Easy. Just to give you some hints, the largest deployment for Google of their technology in the TV space was with Comhem in Scandinavia. Comhem has an aggregated amount of subscribers of about 600,000 subscribers in total, while Easy has 4.5 million subscribers, roughly. The amount of growth that we have with Easy is actually in the tens of thousands a month. That means that it will much probably make the Comhem deployment much smaller than the Easy deployment in not so long. Also, we integrated the most advanced hybrid technology and they have, and we have. That means that this is the most important reference in our opinion, but we have been checking this with other players in the market, and we believe that this is solid. One of the most advanced references that you can use in terms of integration of Android TV operator tier. So just in terms of volume, this is extremely relevant. We also work with Google in other areas, like the advertising technology. We integrated the Google advertising technology in some customers, including the Mexican customer. That means that now you can use Google to also promote advertising and get extra revenues, an extra layer of revenues into those customers. So we are expecting to also be part of this business in collaboration with Google. Hopefully, Nick, this will reply your question. If you have any more things that you are interested in, please let me know.
Jose, could I just, interrupt and just ask you to read out the questions as well, just because we don't make them visible to other investors? That would be very helpful. Thank you very much indeed.
Okay, thank you, Mark. For the next question from Jake D, is with SAPI competing with some big major branded providers, what would you say differentiates your product from the rest of the market? SAPI is using a technology that was designed to work with hundreds of thousands or millions of subscribers at the same time. This is something that in the market SAPI is moving. It's quite unique. You have only 3 players in Spain, including Vodafone, Orange, and Telefónica, Movistar, that have tier 1 proposition, a product that can give service, the amount of content and the level of the user experience that we are providing. This is a tier 1 solution. We have integrated with people like Netflix or Disney, and we have done that with a unique search and recommendation tool. There is only a handful of technology providers that have done that in the world. So in terms of the proposition, SAPI has now a proposition that is at the same level, if not higher than the one that Telefónica has. And Telefónica is the incumbent player in Spain. SAPI has now possibilities like transferring content seamlessly from one device to another. You are watching your content in a tablet, you have a bookmark, you can transfer this immediately to the TV, you start using your iPhone as a remote control. Many of those functionalities are actually not available in players like Sky in the UK or Telefónica in Spain. Why we have been able to do that? I would say that there are 3 reasons. We are very flexible. Our cost structure is much better than other companies in the world. We have a big customer supporting this level of investment in R&D, say Easy in Mexico, and we don't have any, I would say, legacy deployments, a legacy background that is preventing us to innovate quicker than others. We were able to apply the experience and the knowledge we had of this market in a brand new product proposition and test this with real high scale customers. So now that we are providing this to people like SAPI, and the level of functionalities they have is tier 1 without all the legacies of the tier 1s. Hopefully this will explain, but please, Jake, let me know if there is something else that I can further explain. Siddharth B, hopefully I'm saying this properly. It seems that you have a stable product that's proven to work well. However, new sales have been slow. Have you considered investing in your sales and marketing capabilities? What specific plans do you have? Okay, thank you very much. I think that I have more or less covered the question, but let me just be a bit more specific. In terms of sales and marketing, these are the departments in which we have been growing more in terms of investments. In sales, we have strengthened our network. We signed several reseller and partnership agreements to cover more area, to cover more specifically, more locally, some areas of the world, especially in Southeast Asia in the last 6 months. So hopefully we will have some good feedback, some good results from that. In terms of marketing, we are participating in all major events. We have improved our branding, our product proposition. The fact that now we have these solid references have been quite a very important push to the awareness, to the level of awareness that we have as a company. So we are using as much as we can, not only the classic branding techniques, but also intensively social networks. So hopefully this will also represent a push to our pipeline. Another question from Siddharth. What's the current H2 fiscal year 21 revenue visibility? Any leaf tenders at the moment? Many leaf tenders at the moment. Many. I cannot count them with my hands and Gonzalo's hands. So it's many of them. We saw them freezing a bit during the first months of the pandemic. Even if no one of them dropped, they didn't want to make the decision until at least after the summertime, until they had more visibility on how the pandemic was going to affect their levels of subscriptions, etc. The churn rates at the moment are in the best figures for most of our customers ever. In most cases, actually halving the level of the churn level they had before, and most customers increasing their broadband and broadcast media packages, because with the confinement they wanted to have the best connectivity and the best TV proposition. So this has been very good for our customers, but it takes a bit of time for them to move this level of optimism to the investment capabilities or the investment appetite. Now we are seeing that. This is good. So there are many opportunities that we are negotiating at the moment. The revenue visibility is quite high. I would say that the fact that we launched very recently Disney Plus and Android TV operator tier in Easy doesn't give us in the first few days or weeks after the deployments much visibility on how this is increasing their level of subscription rates, how they are growing. They have increased the rates of signing up new customers. That is very good for us, but we try to be fairly conservative in our projections for the year end and not factoring any of those growths coming from Android TV and from Disney. We are not assuming that we will win any big major deals in our forecast by the end of the year. Said that, hopefully this will prove wrong, and we will be able to consolidate some of the propositions that we are participating in at the moment. Gavin L, what pricing power do you have for the tech? Gavin, I must say that I don't understand exactly your question. If you are talking about the pricing levels, or you are talking about how do we value our product. So if you can extend, I would be grateful. Very good question from Simon. Why does the dominant shareholder keep you as a listed company? And what protections do the few remaining shareholders have from him taking the company private if you ever look like becoming properly profitable? Very good question, Simon. I would ask you a question. If our shareholder really wanted to take this private, why are we still listed? Okay, because the price would be attractive. We consider ourselves, and all the feedback that we are having from the market is that the valuation of this company is quite low at the moment when compared to the revenue level, to the EBITDA level. So he would have done that before the company went up in terms of share price, no? So it's very good to have a way to have liquidity in the future. Obviously, at this level of investment, this makes some shareholders be scared of investing in the company. I understand that, but our understanding is that our major shareholder is a very stable one. He does not have any intentions to do any kind of delisting or movement in the future, and if any, it would be allowing our shareholders to join the register at a higher price than the one that we have today. My understanding, and I'm not the major shareholder, is just he's just waiting for the price to go to the levels it should go, or higher levels, to allow other investors to participate in the pie to enter the register. Hopefully, Simon, this replies to your question, but happy to discuss about that. Gavin L, how do you charge for your technology? Your problem solving. We have investment in product development. We understand how much does it take for us to deploy our product, to develop our product. We compare ourselves and to other competitors. We see what pricing levels they have for similar propositions like ours, and we try to be in that market. Some others are having a worse proposition and their price will be lower than the one that we offer customers, but we understand that our pricing point is very competitive. Just to give you some indications, for a new customer that is willing to have our product in a SaaS model, in the software service model, they would pay us between $1 to $2 per month per subscriber. If it is a one-off, if they wanted to buy the service from us and just have a perpetual license for a household, the price for these households would be between $8, $9 to $10, $12 per household. In the second case, they would need also to pay a yearly support and maintenance, a yearly fee per household also for the upgrades on the product. So if we are talking about not licenses, but professional services, we have obviously rate cards for our engineers. I would say that having engineers in the UK and in Spain, mostly in Spain, we are very competitive when compared to others, to other competitors that are based in the Netherlands or based in the United States. So hopefully our customers will also appreciate that. So Gavin, if you have any more questions there, please let me know.
Jose, that's brilliant. Thank you very much. I think you've probably addressed all of the questions that have come in, so thank you very much. If any do come in post this, obviously we'll make these available to the management team after the meeting has finished. Perhaps, Jose, before I redirect investors to give feedback, perhaps I could just ask you for a few words to wrap up. And then, as I highlighted before, the investors' opinion does matter. Their feedback is important to you, and we'll make sure that we direct them. So if I could just hand back to you to close up, that'd be great.
Okay, thank you very much, Mark. Just three big things. The first one is that we have the right product in the right market at the right moment. References are extremely important. The technology that we have is in the top rank when compared to other companies in the world. And we are participating, being one of the main actors in the super aggregator model in the media field. That is what will give you, the ultimate subscribers, the final subscriber, the tools to enjoy content. If we are the ones providing the right technology in the right moment to do what you really want to do, I think that we are doing the right thing. And we are grateful for our shareholders and our partners and our employees to allow us to be in this market. We are extremely happy to be here.
That's brilliant. Thank you very much indeed, Jose, and thank you also to Gonzalo for updating investors, particularly on the day of your results. So thank you very much indeed for that. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback to the company. If you access this meeting via our website, the feedback page will appear. If you access this via the link sent you by email, you'll simply be asked to log in to provide your feedback. On behalf of the management team of MIRADA PLC, we'd like to thank you for attending today's presentation. That now concludes today's session. Good afternoon to you all.